It's about that time of day again. My name is Joseph. Monday evening, October the 1st. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight, we're covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bullish after a massive afternoon rally. And these types of moves tip me off to a possible trading range environment tomorrow morning. So I'm watching for those double tops and then looking for that two-try failure for a retest of the high tomorrow. The S&P is bearish at first glance at least, but the close of today's session left the door wide open for the bulls to grab control early in the overnight session, with the possibility for a nice short covering rally back to retest this morning's high. Nasdaq is also bearish, but wait, we're sitting at three major support levels right now on the Nasdaq. Is this going to turn back up and retest that high? I've got a couple things I'm watching for right now to see when the time comes to start buying those pullbacks for retest of the high tomorrow on the Nasdaq. How about the gold? Gold is bearish with a triangle pattern tonight, sideways and flat. That tells me to focus on failures around those swings on the chart. We'll grab that gold in just a moment. And of course, we can't forget about the euro. The euro is bearish with a spike and range pattern, and that tells me to look for selling opportunities using the two-try failure pattern up above those highs. Got a really interesting chart tonight on the euro. Well, we're back in the action once again. Hope you had a great weekend away from the desk. But now, back in the saddle, we get a new month and a new week filled with opportunities. We got a couple really big opportunities setting up for Tuesday's trading session. And you know me, I got a great newsletter in store for you guys and gals tonight. We're going to put the plan together in just a few moments. Before we jump in, though, I got to remind you, if you're watching me on YouTube this evening, you can find a detailed description of this entire trading strategy written out right here on my blog at Sideways Markets. If you're on the YouTube channel right now, I'll put all the links in the description of this video. Also, if you have any questions about anything covered in the video, there's a comments form right in the bottom of the blog page. You can post your comments there. And of course, if you're on YouTube, right, you can drop your questions in the comment section there. And if you like what you see, please help support this YouTube channel by subscribing to our channel. And then to make sure you never miss another great video, hit that bell icon so you get notified every time I publish something new. And don't forget, if you want to stay in tune with everything we do here at School of Trade, head over here to the new blog at sidewaysmarkets.com and start your transformation, right, by joining our nightly newsletter. You'll never miss a beat. I am just about to start releasing a brand new trader psychology series in the next few weeks. You want to see that, right, as we go into the end of the year. So don't miss a beat. Grab that newsletter. All I need is your name and your email address, and I'll shoot you an email every time we publish something new. Boy, it feels good to be back in the saddle here. Had a great weekend. Hope you guys did as well. But as always, right, as always, we're only as good as our next tradable opportunities. Let's jump right in. Tomorrow's Tuesday, October the 2nd. And of course, we are looking at a wide open space here for tomorrow. We do have Jerome Powell speaking at 12 o'clock Eastern time. What's he talking about right here tomorrow? Probably not going to move the markets very much tomorrow, right? The National Association of Business Economics. Boy, I'll bet that's a party to be at tomorrow, right? Bunch of wild people at that party tomorrow. The bottom line though is I don't expect that to be that big of a market moving event. So we got a wide open space tomorrow. You know, we saw some headlines today from this new, USMCA, right? The new NAFTA deal. That kind of tossed things around here a lot today. So hopefully, right, with that wide open space tomorrow, markets will be able to stretch their legs tomorrow. And when you see these charts, you'll see why I'm actually excited to have a wide open session tomorrow. So no major news on the schedule for tomorrow. Just be aware as we get later in the week, we got the inventories on Wednesday, jobs on on Thursday, but the real big jobless claims report, right, it's nothing in comparison to the employment number on Friday. Friday is the big news day this week as we go into that first week or first Friday of a new month. We also have a Columbus Day holiday coming up, so it's going to be really important here to make our money as early this week as possible. We'll talk more about the plan for later on this week, right, as we go forward into this first week of October. The big question is, do you have your Halloween costume picked out? You don't want to be the last one digging through the bottom of that barrel right at the party rentals place, so make sure you plan ahead on that. All kidding aside, let's grab some charts here, shall we? Had a great day today in our trade room, and looking forward to having another great day with you guys tomorrow. Don't forget, we open up our trade room every morning here at schooloftrade.com, right, at 8 o'clock Eastern Time, and we're going to execute this strategy right along with all of our members. Starting off with oil. Oil is bullish, just a little bullish, right? Strong run higher, got a bull channel, a hidden channel, and of course a measured move and reversal line on the chart this evening. The trend is clearly bullish. I mean, it's difficult to say this is anything but, right, insanely bullish right now. So very bullish. And anytime we have a bull market, I know my job is to look for buying opportunities at support levels with a target going back to retest the high. So where can we find some support? Well, again, we're bullish. I want to find support levels. I have a beautiful support level at this 74.90. That would be a great spot to be a buyer. I'm connecting these highs and bringing it off this low. There is a support level as well. And you'll notice both of those levels really do a good job at lining up. So watch that 74.90 area tomorrow morning, right? That will definitely be something on our radar here for tomorrow. And then, of course, the target on that will be a measured move. If I can zoom out a little bit here real quick, right? We have kind of what almost feels like an Elliott wave, 5-wave sequence, right? 1, 2, 3, 4, 5. It's not exactly correct, but it looks similar. The bottom line is this move up will probably be symmetrical to whatever move up we get tomorrow. Right, we do see this quite frequently where we'll go 1.3 and then 1. Usually that run that goes through the measured move will usually end up around that 1.382 somewhere. So it looks like we have, right, potential here for a measured move. And again, right now I'm kind of guessing that this area down here between that low of that channel, right, and the and that reversal line will definitely be a great area there for us to be a buyer. But I got to be honest, though, right? I got to be honest. Whenever I see a market make a run like this, the next day is often a range. So if we can kind of move this off here for a second, don't be surprised if we see a range here, right? We see a range kind of as we go higher. Ultimately, all of this movement happened after lunch. So I'm sure a lot of professionals left for lunch and missed a lot of this big move. So I would imagine if we don't pull back, we're going to likely see this market now start to go sideways. And if we do see it start to go sideways, we're looking for double tops at that high. Once we start seeing double tops, the plan then is to take the size of this range, copy and paste it down. That will create support. We call these range expansions, kids, right? Range expansions. Those range expansion levels now, right? So imagine now we take that range, we take the size of that range, copy and paste it down. That creates our range expansion. And then we're going to be looking for that 2-try failure pattern, right? 1 try, 2 try to buy back up. So that range expansion level will act as a support level as well. And what if we keep pushing higher? If we keep pushing higher here, well, we've got that measured move again. We got to wait for a pullback to get that measured move. So that pullback, that measured move really should be listed right now as TBD. That is not a firm measured move here. But if we keep going higher here, right, look out for a spike and channel. A lot of times these real big runaway markets, they turn into channels up here. And if we do get that spike in channel, watch closely for that nice deep pullback right, for the buy off of that deep pullback. Eventually buyers will grow weary of buying high here, and we'll get a nice pullback, and it will be the patient traders who really make the lion's share of the profit tomorrow. So we know we're bullish. We know we want to be a buyer at support. Now, let's play this game, right? What if price goes up? What if price goes down? What if price goes sideways? If we pull back here right now, again, you kind of know where I'm looking here, this combination of the battle zone high with that channel low. If we do pull back into this battle zone, we're going to be below the moving average. And of course, once we get below that moving average, I'm expecting to see sellers try to sell that pullback. This sets up for a two-try failure pattern, one try, two try. We can now anticipate where the stops are for those sellers, right? If you were a seller, if I was a seller, right, my stops would be right above that high. And so I can then look for a buying opportunity with the appropriate signal, obviously. And we'll talk more about the appropriate signals in our classroom sessions. But the most important thing is that'll give me the first opportunity here, which will be a two-try failure pattern. Then we can take, that new higher high. We can combine that now with the prior high, and then finally call a hidden channel, and then set up for a hidden channel pullback, right? So some really great pattern opportunities here if we can get a nice deep pullback. Again, first one will be a two-try failure pattern, looking for the proper signal as we go back higher by the moving average. The second pattern then, of course, you don't want to chase after it going higher. You want to wait for that pullback. Remember, you always want to buy at support. Right, so I can use that prior swing as support. I can use the channel as support. Right, always want to buy at support. Right, those are the A+ trades that the best traders in the world always wait for, and so that will give us our second opportunity. Right, so a two-try failure into a hidden channel pullback pattern. We're going to talk more about those patterns in just a second, so don't worry. What if we go sideways here? Right, what if we go sideways here? We talked about this a little bit already. Right. We want to find support. So we take the size of this range, bring it down. That creates that range expansion. Let's just say the range expansion is here. Okay, once I see that range expansion, I'm looking for one try, two try failure pattern, right, below that range, right? Two-try failure pattern below the low of that range. And again, with the proper signal, right, we're looking for that buy going back up, right, to retest the high. And we'll leave a runner at that point up to that measured move, which is waiting for a pullback. Now, the real challenge tomorrow will be, what if we keep going higher here? Right? What if we keep on grinding higher here? If we keep grinding higher here, that is very common. In fact, we see a lot of these low volume moves continue going here because really what it is just it's got that fear of missing out, that FOMO, that low volume kind of rally there. So eventually we'll get a pullback. What you want to look for is a pullback below these prior swings, right? Those swings are going to be your key. And so what you want to think about is let's say we get a nice deep pullback here, right? You get the trap into a two-try failure, into a hidden channel pullback pattern. This three, if we get a spike and channel pattern, there'll be three awesome opportunities. One will be a trap low, two will be a two-try failure pattern, and three will be that hidden channel pullback pattern. So as it goes higher, there's going to be even more of that FOMO kicking in, and this will even be more important here. So those are our three real scenarios. Do we pull back? Do we go sideways? Or do we keep going higher? Now, we've talked at this point now about the two-try failure, the hidden channel pullback pattern, and of course the trap pattern. We've talked about spiking channels and trading ranges and hidden channels. So let's tap the brakes here for a second, because if you're here for the first time today, a lot of this terminology might be going right over your head. And I want to back this up a little bit and give you a free resource, not only to teach you all the terminology, but more importantly to give you kind of a deep dive into the strategy that we use every day in my trade room. And you'll notice I'm going to put a little link up top here. I'll link it up top. I'll put it in the description of the YouTube video. I'll also put it below the video on the blog. This will take you to our free trading class. Highly recommended. I get so much great feedback from new traders, along with experienced traders. In fact, fact, I had a great email come in this afternoon from a guy who said he'd been trading for 20 years and learned more out of my free trading course than he had on any books he had read over the last 10 years. So that was pretty cool to hear. So yeah, you're going to love the free trading course. Pause the video if you need to. Grab that free class. If you have any trouble with it, just call me in the office or shoot me an email or drop me a comment, right? And I'll make sure to respond to you as soon as possible. Now, how do we turn bearish? Okay, how do we turn bearish? In order for a bull market to turn bearish, we need what we call the 1, 2, 3 reversal. Not 1, 3. 1, 2, 3. Is that 1, 2, 3? Yeah, 1, 2, 3 reversal. Now, there's an exclamation at the end of this, right? Because it requires some punch to it. What we need to see is we first have to see a strong move against the trend. That's 1. Then we need to see a pullback to the moving average. That's 2. Okay, now before you start saying sell this thing, right, remember, we see these all the time, and you're going to see a couple examples of these later on in tonight's video where we see sellers come in, but now all that is a 1-2 try failure, right, and we go back up to retest the high. I'm going to be looking to buy that pullback, right, tomorrow morning. Now, if we can get this thing to run off of those lows, right? If we can get this to run off of those lows, now we have 1, 2, pull back to the moving average, and 3 is a jump off that moving average. That jump, it gives the bears control of this market, puts momentum at their back, and makes our odds a whole lot better when we're looking for sells. Now, where do we sell from here? Where's the next play from here? We mark up that prior swing, we draw a trend line off this low, a trend line off this high, and now you're looking for it right around here, right around there. I want to go up, right, and back down, right? That's your sweet spot, okay? That's your sweet spot. So again, we have to wait for more proof on that, and if the bears, if they can get control of this, where are they trying to go? Probably back to the range where we spent most of the morning session in today, right? Around that 73.40. So look for that to be, right, your final target for those bears. Bulls want to buy low for a retest of the high and a measured move. The bears want to go back, right, to where the day began, around that 73.40. Don't try calling those tops. The market hasn't gone too far right now. It can keep going without us, right? Got to wait patiently here to get that reversal. Let's keep going. Got the crude oil out of the way. How about some S&P? The S&P is bearish with a trading range, a channel, a measured move, and a reversal line on the chart this evening. The short-term momentum is clearly bearish right now, telling me that I should be looking for selling opportunities at resistance levels. But this last candle, that little guy right there, in my opinion, is a big clue. Notice how the last candle, pretty much the second to last candle, jumps off the moving average. When it does that on these 2 try pullbacks, that's usually a reliable sign that buyers are going to try to take control and sellers, right, are going to be losing their grip. In fact, we see this quite often where we'll see a strong move up. We get a little bit of a bearish, momentum swing, and then we see this. We see it go back above the moving average. In fact, we saw this last week on gold, I think if I recall correctly. We go up, we bounce off the moving average. And again, it's this bounce, right? It's this momentum now that's changing. Okay, remember, a 2 try failure would be 1, 2, back down, right? Be buyers once, buyers twice. But pay attention to how that second attempt, right? Because now if it goes bam, right, and jumps off that moving average, not so fast. Now the bears have a big problem because guess what? Right below this swing, you've got buyers waiting. And this is where we get some of our best opportunities for buys. So this is a very big clue, and it happened right. I mean, it's amazing how it was literally the second to last candlestick. We had this obvious bear trend, right? But again, we go up 1 try, 2 try. That looks very convincing, right? That looks quite convincing this. So Knowing this, my plan is to see if these buyers will take it higher into the opening bell in Asia. Then I can start looking for buying opportunities, right, for a short covering rally back to retest this morning's high, right? I'm also looking for bears to try because you're probably also going to see some sellers trying to get in here. And we're probably going to see a couple scenarios. One would be a run with a strong signal candle back down. The other would be a trap low and a move back up. So we got a couple different options we're looking for right now. There is no doubt about it though, right? We started off as a bull. We finished as a bear. So momentum is just a little bit more to the bear side right now, right? But this one try, two try here is making me think we're going to get a trap low and a buying opportunity off of that, right? Off of that low. It's either that or we're going to see, right? Or we're going to see a strong signal through that low. If we see a strong signal through that low, now, I don't want to give away too many of my tricks, but what I'm going to do is I'm going to look for the 50% level right there, right, and look for that as the entry. So if we do see it run lower here, do not chase after it, right? Look for that limit in to finish off the move back to retest that low. Now, we have to hit that 50% level before we get back to retest that low, right? You don't want to go down to the low and then back up and then try to do it again because that's not going to work. Okay, so two scenarios that you're looking for. Well, actually three scenarios, to be completely honest with you. One is going to be the easy one, right? We jump. You know, if we come in Asia and this thing's just jumping higher, then obviously we know the deal, right? The market's bullish. We'll grab that new high, right? We'll grab that low. We'll mark up that level right there, and then right this area right there, that's the buy zone, right? Buying the pullback, right? And we're in back up to retest that high. Now, the more complicated pattern here, one is going to be a buy with a trap low, right? A trap low has to have a nice, strong signal coming right off of that low. It'll start off with the bears unable to close low, right? To close strong, right? Big wick at the bottom of a red candle, or maybe even a doji, right? Then that green candle, right, will signal that trap. And that could be an explosive move higher for us tomorrow morning because of the short covering rally, right? Sellers who are stuck now short, they're going to have to get out for that rally going back up to retest the high, all right? But if you really want to, right, if you really want a little more complicated pattern here, again, we're watching this little trap pattern, keeping your eyes on this low because that's the objective. The objective is back to retest that low. We're going to want to see, for us to sell this, we're going to want to see a strong move down. Okay, we don't want to go back and retest that low yet. We want there to be a sense of FOMO, right? Fear of missing out. We want people to feel like that window is closing quickly. Then what I'll do is I'm going to measure the distance from that high down to that low. See if I can draw it quickly here, right? And then grab that, again, find the halfway point now. Okay, and that oftentimes acts as a line in the sand. We'll go down, up, and finish off that move. That way your risk and reward are balanced on that trade. As you can see, professional grade trading strategies, it's not enough to just go with the trend. We have to make sure we know where the objective is, and we have to know, right, we have to make sure that we increase our odds by making sure our risk reward is balanced, right? We don't want to sell too low. All right, guys, and I know I'm covering a lot right now. This newsletter can be a little bit more advanced sometimes, but you know what? We all start somewhere. And if you're here right now as a beginner trader or even an intermediate trader, and what I'm talking about is a little bit over your head, that's okay. That's why I have that free trading course, right? Again, up in the upper right-hand corner, right? It'll really get you dialed in, and it will take you to the next level, right? It'll take you from that beginner to intermediate or from that intermediate to advanced, right? Every day we want to get better as a client of mine. So that's the plan there, right? That's the plan. At the same time here, if we do roll back down to that low, watch out for that double bottom. If it double bottoms, this becomes a range with a bear bias. One try, two try failure, right? One try, two try failure, and we'll sell back down again. So if we do go sideways. Okay, if this thing collapses and goes lower here, right, we're obviously trying to go back into that range that we finished up last week. Again, the momentum is clearly bearish here. So if we go back lower and we collapse lower here, right, we know what we're hunting for. We're hunting for the low of this range, 29.18. So grab those levels of resistance, right? Get this thing up. I love the two-try failure pattern when we're running out of space. Right? When we're running out of space, right, that means there's not a lot of profit potential left, right? We want to go up, let those buyers try once, let them try twice, and then sell into their stops, right, as we go lower. So a very interesting chart there, right, on the S&P. It's that last candle of the session, or second to last candle. The last candle did not confirm either way for us, and so we're really waiting here to see what the opening bell in Asia is going to bring. And again, right, make sure you check out that free trading course. Now, how about some Nasdaq, right? What a crazy run today in the Nasdaq, right? Nasdaq is bearish with a measured move, a channel, and a support trend line on the chart this evening. Long-term momentum is clearly bullish, right? We can see this long-term, right? This long-term bull channel. Long-term momentum is clearly bullish, and we're going to want to retest the high of that channel. But wait a second, right? Short-term momentum, not so bullish, right? This is not so bullish, right? This is a lot, right? This is a lot more of a bear market in the short term. Right? And that tells me that before I go trying to pick a bottom here and buy back up to retest that high, I got to see some momentum start to shift in my direction. Now, to do this, in order for us to start getting warmed up to be a buyer here, I'm first looking for sellers to try twice. Now, what I want to show you is, I want to show you back here, because here's a good example where we go lower. We're obviously bearish here. Notice how the bears try once. They can't get a retest of the low, right? The low, of course, right here is their objective. They try once, right? They try twice, and what happens? They fail, and price jumps, okay? That's the same type of situation we're looking for now. We've got that strong move down. I want to see him try once. I want to see him try twice, right? And that's going to give us, first, the big clue that sellers are gasping for momentum, right? They're out of bullets, right? That's going to tell me now the bears are in here, and we know if we get any move going higher, guess what? Those bears are trapped. They're stuck on the wrong side of the market. And what would you do, right, if you were stuck on the wrong side of a bull run like that? You get out as fast as you can. In fact, you'd probably reverse your position, right, and look to be a buyer. So it's important to remember here, right, if the bears fail, followed by a strong bull signal, okay, then we'll start looking for, right, we start getting that one try, two try. I'm going to zoom in a second here, guys. We get that strong, right, that strong bull signal, right? If you're a client of mine, you know exactly what we're looking for there to be the first ones in. Then we'll look for that new higher high, find that new channel, and we'll focus on buying, right, as we go. So there will be a two-try failure opportunity here to be the first one in. Well, maybe not the first one in, right? We don't want to be the first one in, but being in when the momentum shifts. And then of course the secondary follow-up would be that new hidden channel pullback pattern for a retest of that high, right? It's also important to remember here though, right? If the bears fail, this will likely be an aggressive move going higher. Because remember, all these bears now, right? If this thing fails, it's probably going to be pretty aggressive as it goes higher. We call those short covering rallies, right? Which means waiting for a deep pullback isn't going to be easy. So if we do see it jump like this, we're going to have to put on the more aggressive traders cap, right? And get a little more aggressive with seller failures and traps. Okay. Now, what does it take for me to sell this market? Okay, we've talked about being a buyer here so far, but let's not forget the momentum is bearish in the short term, and that's really the only thing that matters for us day traders, right? I'm not here to predict the future. I'm here to follow momentum, incorporate support and resistance, right, and increase my odds by finding low risk, high reward opportunities. That's all a trading career is built on. What does it take for me to sell this market? First, all the bears need is a retest of this low. If the bears can get back to that 52.25, right? Bears get back to 52.25, bingo, right there. We now look a whole hell of a lot different than we do right now. Okay, so if the bears can get that retest of that low, that will wipe out any bullish momentum, right? What it'll probably do is it'll either go through the low and then reverse, right? Which we'll look for that reversal, we'll talk about in a second. Or it'll go retest the low, bounce and become a range, in which we'll be trading the range, right? Or it goes lower through the low and we are finding a new channel and selling off that channel. So there's a lot of potential here, but the bears, they have to get back, right, and retest that low. Okay, then we can go from there and plan from there. Okay, so again, bull side, bear side, what does it look like? To be a bull right now, 1 try, 2 try. I really want to see a higher high here for that second try. 1 try, 2 try. Because as we go higher, you'll have more bears trying to sell, right? Much more effective to get a 1 try, 2 try with higher highs than to go 1 try, 2 try, because all that really is the same people participating right there. What we really want to be a buyer here right now is we want to go 1, we want to go 2, and I want these to be higher, because at higher prices, you get more sellers interested. As you get more sellers interested, once we see that strong signal candle, right, the appropriate signal, that's going to be your 2 try failure pattern to spark that short covering rally. Then strong move up, and it will probably be relatively strong on that move higher because the sellers will be run over. Then we find that new channel. Look for that buy off the low of that channel, right, and lickety split, right, we're going back up to retest that high. Once we get back up to retest the high, then time out. Do we see us keep going with a new channel and we're buying pullbacks as we go? Do we retest the high and go sideways? 1 try, 2 try failure pattern, right? 1 try, 2 try failure can look like that. Up, 1 try, 2 try failure, right? That type of situation. Okay, so watch for that tomorrow as well. Okay, so that's the plan there for the bulls. 1 try, 2 try, buy. That gets momentum going. New channel, pullback, retest of the high. Maybe we go up into a trading range, right? 1 try, 2 try, pullback, or maybe like on the crude, right? It runs, we see a spike and channel. We find those prior swings. We get aggressive, right? And we buy those traps, right? So 2 try failures, hidden channels, trap patterns. Okay, what about the bear side? Right? And again, all these patterns, you can see hundreds of examples of all of these patterns. They're real patterns, right? Grab that free trading course. It's below the video, it's in the description, or it's below the video on the blog, right? Upper right-hand corner, it's all right there. Now, if we go back and retest that low, there are really 3 scenarios that you want to be ready for. Okay, 1 is kind of the bury you and run, right? The okie doke. We get that tap low. All that tap low does, all that little lower low does is shake out. Everybody tried to buy the low, right? All the buyers who try to buy this dip, because the long-term channel, all that momentum, what they're going to do is they'll literally come back, stop you out, take your money, and then bam, big move up off the moving average, new channel, right? Buying that pullback from there. Okay, so that's an option for tomorrow. That is likely for tomorrow. All right. Now, what if we bounce back up, but we don't tear higher, right? Now we go range. Now this is important because yes, the long-term momentum is bullish, but the short-term momentum is bearish. And as a day trader, that's the lifeblood. What is the short-term momentum? How many times have we seen a long-term bull trend, but the whole day is down, right? I mean, come on, that happens all the time. Right? So we don't want to get too wrapped up in the long-term trend. We do want to be aware of it, but it's not going to determine the trades I take right now. Right now, it's short-term trend. If we get that double bottom, right, and we don't see it launch, right, like that first scenario, then we're looking at this as a range. And whenever a range, we know we're looking for that 1 try, that 2 try, and that sell back down with the appropriate signal, which you'll learn more about in our classroom sessions, right? We'll look at that sell back down to retest that low. Now, the easy one would be if we get this run going lower, right? New lower low, we find that new low, mark up that high, right? Mark up that level, and now we can use this underbelly of that range, top of that channel for selling opportunities back down. And if these bears can take this, right, if the bears can take this, we have quite the potential now, right, for a nice move lower. I would imagine that 76.16 level, 76.17 level be a nice easy target for those bears, because it looks like this might be a bit of a range right there, right? So kind of a pendulum swing up through it on the other side. So that'll be our targets to the downside there. But again, right now though, we got a little bit of waiting to do here in the Nasdaq, right? So grab a cup of coffee, hang out for a bit. We'll see what we get here in the next couple hours. Let's keep going here. Now, from the Nasdaq over to the yellow metal, gold is bearish with a triangle, a measured move, and a battle zone on the chart this evening. The long-term momentum is bearish, right? Before we started going sideways, right? So we are bearish here in the long term before we started going sideways, right? So there is a slight bear bias. Okay, that tells me the most reliable trading opportunities will be using buyer failures and the two-try failure pattern up above the highs, right, of this range. If we do see prices, though, go back down to the low of this range, what I'll then do is rather than using the two-try failure, a little more reliable two-try into that hidden channel pullback pattern. But honestly, guys, I think you're going to be able to find both sides of this market to be pretty reliable here on the gold. We've got some talks back and forth about Brexit, and I think that's what's kind of keeping these guys under wraps here right now. So ultimately, two-try rule. That's the plan here for tomorrow. Stay away from that middle. Pay attention to these edges. Pay attention to these edges, right? Those will be important. I want to go one try, strong move down, pull back to the moving average, right? Let the bears try again. Remember, they've got to pull back to the moving average here, and then we can look for that run back higher. We saw a great example down here, right? You'll notice they go one, they pull back to the moving average, two, and back up. Very similar pattern we're looking for tomorrow. As we go higher, one try. You can probably finish my sentences right now, right? Two tries, right? Let those buyers try once. Let them try twice. And then we'll look for that sell back down. You can see an example here. One try, two try, right? Back down into that range. And obviously, I'm not giving away everything here on this nightly newsletter. If you want a much deeper dive into the two-try pattern, into the two-try failure, if you want a more deeper dive into this entire trading strategy, make sure you grab that free course. It's below the video in the description or on the blog or in the upper right-hand corner for more. The hardest part here for tomorrow will be if we sit in the middle of this range. Stay away from that middle. One try, two try, one try, two try. Now, what would a breakout look like? We talked about the 1, 2, 3 reversal. Well, did you know there's also a 1, 2, 3 breakout? Absolutely, right? I'm pretty clever with that too, right? 1, 2, 3 breakout. It's the same basic principles as the 1, 2, 3 reversal, right? We need to see a strong move, hold the pullback, and break out, right? This is a good example. It does not matter how strong that first leg is, right? Strong move up, pull back to the moving average, right, and strong move through. That will give me that 1, 2, remember 2 has to pull back to the moving average, and then 3. Once we get that, check, 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 grab that new channel, find that swing, and again, it's this area right there, right, look for that pullback, right, to buy back up. At that point, we're thinking large measured move, right, for that big target up around that 1200. If we do run lower here, we're probably not going to have much room to the downside here to get that measured move for selling. But 1, 2, 3, new bear channel, right? I'm looking to sell as we go, right? As we go into some new uncharted territory here on the gold. We are at yearly lows here on the gold right now. So sideways range, again, buy low, sell high, avoid that middle. And let's wrap up here tonight on that euro. Euro is bearish with a trading range and a measured move on the chart this evening. The trading range has a bear bias that tells me to look for, right, bear bias into that trading range. What does that tell us? It tells us to look for selling opportunities using a combination of entry patterns along with resistance levels tomorrow morning. The key resistance level is the high of this range along with this range expansion, right? I've got this range here. I'm copy and pasting it up. That's our range expansion level. Copy and paste it down. That's our range expansion level lower. As you can imagine, this is major level of support down here, right? As you can assume, that's major level of resistance. Okay, I want to buy down here. I want to sell right up here. Relatively simple idea. And of course, anytime we have a range-bound market, the very first thing I think about is the two-try failure pattern, which you guys are experts on this point are, right? Stay away from that middle, right? One try, two try, back down in. If we can really get lucky tomorrow, we'll get that big move up, one try, two try, and then into a hidden channel pullback pattern, right? I mean, that would be ideal, but that takes a much bigger breakout. If we get a one try, two try here, that hidden channel pullback pattern is not going to be the greatest, right? You got the two try failure and the hidden channel pullback pattern, right? Like right here. Right, one try, two try. I mean, it's a two try failure, but there's not a lot of meat in the bone, right? That's not a risk small, earn large opportunity. If we can get this thing to go up, one try, two try, now I can take a small amount of risk for a much, much juicier, right, reward here. That's a much more desirable trade. One try, two try, failure. Can't get that moving average up. Now, mark up that swing, mark up those trend lines, and we look for that sell right up off of that high for that move back down. How would it reverse? What would a breakout look like? Strength, right? Strong move up, pull back to the moving average. Remember, this could easily be a two-try failure, but wait for it, blammo. Nice big move going higher here. Now we know, mark that, mark the channel, find the channel here, right? And again, it's this spot right there, right? That's where we want to be buying off of that low. Easy target here for the buyers if they get it back around the 18,000 big round number. What about the buy side right now, right? What about the buy side? Buy side, we're clearly bearish, right? We're clearly bearish. So it's always difficult to get these one try, two try failure patterns as a buyer, because much like we talked about on the S&P, if you get momentum too far bearish and you're trying to be a buyer off that swing, you're going to see a lot of sellers waiting there to pick your pocket, right? Now, I wouldn't recommend that as a seller because you're selling right into the low of that range. But the problem is if you try to take this buy right off a two-try failure pattern and you're going against that momentum, it's just the odds aren't going to be, they're not going to be as good, right? So what I like to do is I like to wait for that momentum to turn, then find that hidden channel, right, and look for that hidden channel buy. Again, you're buying that combination here of that reversal line, the low of that channel, right? That's your sweet spot for that move back higher. And then don't forget, if we get a little bit bigger move lower here and then back up, remember that pendulum swing will make for a great target, right? The amount of the move down, amount of the move up, right? That pendulum swing will make for a great juicy final runner target, right? If you want to let it rip right to the upside. Guys, as you can see, I have so much to share with you guys on this nightly newsletter. I can barely cram it all in here in less than an hour every evening on YouTube. If you want to dive deeper with me, right? If you want to go deeper with me, grab that free trading class. It's in the description, right? It's also linked up in the information icon here in YouTube. Also, don't forget, I'll put all the links onto our website, right? I got a great free trial here at School of Trade if you want to learn more. We got beginner, intermediate, and advanced classes. Guys, being a successful trader is a combination of strategy, skills, and mindset. I teach the mindset in our beginner classes, the skills in our intermediate classes, and I teach the strategy, and we execute that strategy elbow to elbow every day together in our trade room. It's a life-changing experience, a transformation from an ordinary mortal to an extraordinary trader, and I've helped thousands of people do this more than anybody else on the interwebs. Check us out at schooloftrade.com. I'll put all the links in the description of the YouTube video. If you're on the blog, I'll link it all up below that video here on the blog. And thanks for being here. Don't forget, I'm always here to answer all your questions, whether it be live support on the right-hand side, right, or calling that toll-free number right on the homepage here of the website. It's great to be back here with you guys. Don't forget, wide open spaces tomorrow. Looking forward to a great day tomorrow. I will see you tomorrow at 8 o'clock Eastern time, and we'll do this together. If not, come back and see me same time, same place tomorrow night on our next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.